Hey guys, what's up? Mayne here with another episode of Payout of the Week. In this week's episode, we're going to be breaking down another Ethereum trade. This one is from an anonymous trader. While their name may be anonymous, their trade is not. They made just under $30,000 in an hour trading ETH. So we're going to break it down as we do every week and see if we can learn anything by trying to reverse engineer some of the trades that the top traders at the firm are taking. Let's get into it. All right, so this was another low time frame trade. Here's some pertinent information. First of all, this was taken on one of our $200,000 accounts, okay? They used basically the full possible notional size. They actually entered 7 separate positions, but their total notional size, once they were fully scaled in, was $975,000. So almost $1 million bucks. You get 5x leverage on BTC and ETH. They took full advantage of that. The total time that they were in this trade was 1 hour and 13 minutes, okay? Not a very long trade. They were in and out relatively quickly. And most importantly here, I guess for you guys, is as usual, what you want to know is they made $29,000 in profit in that hour and 13 minutes of hold time. So they're using our biggest account size. They were maxing out their margin, which we allow you to do. We allow you to trade the entire account size. There's no limitations there. They held this trade for a little over an hour and they made just under 30 grand. So what was the trade here? Well, you're looking at it, okay? They aggressively entered into Ethereum longs here. They added even more here and then they closed here. It doesn't look like much on the 30-minute time frame, and to be honest with you, it doesn't even look like much on the low time frame. This is a very, very aggressive breakout trade that we're looking at here. Zooming in here, the first round of 3 entries, which ended up having an average of 3209, okay, was taken within this 5-minute candle. So they basically entered 3 separate trades for about $450,000 notional with an average price of 3209, all within this candle here. And then when price moved up quite aggressively here, you got to remember this second entry is substantially higher than the first. Price had already moved up 2.5%. You might say 2.5% is not a lot. When you're dealing with this type of a trade size and on this low of a time frame, 2.5% move is quite a lot. First grouping was 493K. Second grouping was 481,000. So they added almost the same size as their first entry and almost $90 higher at 3291. So 2.5, almost 3% higher here, $80+ higher, and they doubled their position size. So this was a very aggressive breakout where they took the long, they saw the breakout had legs, they doubled down, and then ultimately they closed this trade not that much higher here. 3361, excuse me, was their exit. So from their second entry to their take profit, right, was only a 2% move. It was a smaller move than what the move between their 2 entries. But if you obviously average it out, right, they captured 4.5 on their first tranche and they captured another 2 and change on their second tranche. So in total, they captured about a 7% move, 4.5 on the first bit, a little over 2 on the second bit, and it netted out to being around 3% or so, $30,000 on about $1 million position, giving you that $30,000 in profit. So looking at the 5-minute chart here, you're like, Mayne, what the hell is going on? How did they know to enter here? I'll be completely frank with you. This is not the type of trade I would take. I am not a low time frame trader in general, and I'm absolutely not a low time frame breakout trader. That being said, what I can assume, or at least what I would do if it was like, hey, I need to get into a scalp here, what would I be looking at based on the information provided that they might have used to enter this trade? I'm looking initially here at this consolidation here. So if you zoom out even to like the 4 hour, this is a pretty significant consolidation that we're in for price here. And this is a very clear kind of level of resistance, right? You have that very clear level of resistance there as high as the 4 hour. And if I go up to the daily, that level is very apparent as well. So that 3150, let's call it, capping price. 31.40. You go down to the hourly, right? We traded above, back below, above, back below, and then boom, we broke out. And then once we broke out, we had a huge move. Once we broke above this level, right? Price went up almost 8%. However, this hourly candle closed, right? And they had already started entering. So I would look at it in an even lower time frame. Maybe you look down at the 30-minute and say, okay, once the 30-minute candle broke through here, they wanted to start logging. You can go even lower here. Maybe they said, okay, we've got a clear 15-minute breakout. The risk here, right, is we had a 15-minute breakout here and here. That didn't work. This closed above on the 15-minute. This one did, but here you have two consecutive 15-minute candles, and then they just started entering. So to me, that is the idea behind this trade, is effectively, it's a momentum trade. They saw price breaking out of a clear level of resistance here. You even have a bit of a downtrending line here. Once they broke through there, this trader aggressively just started entering. In terms of taking profit, I don't see any highs to the left here for the take profit, right? Maybe you're looking at some sort of order block or something over here, some sort of down candle. If we zoom out, you could say, hey, we have resistance here, right? In the form of this bearish order block that ended up forming the top of price here. So you could argue that this is where they were TPing into. I know this box is huge, but you gotta remember we're way up on the high time frame now. This trade was taken likely on like the minute chart. But that's all I can glean from this. And I know it might not seem super insightful, but to me, this is just a breakout long, right? They clearly had an area of resistance here. Once price broke above this horizontal line and this downtrending line, they just started adding aggressively. I mean, at this point on the 5-minute chart, this very clearly is a breakout here. That is different from these that ended up being deviation. We had a clear breakout. You have a big fair value gap here, which tells you that this move is strong. And they just started entering. The secondary entry to me is ballsy as hell, but price started consolidating. They thought it had more legs. And then right when price got up into that resistance, they TP'd. And ultimately right where they TP'd, once that broke down, price traded significantly lower. So if I had to summarize here, this to me is a low time frame momentum breakout trade. Not my cup of tea, but these type of trades can work. And the advantage of using breakout again is right here in the text. $200,000 account size, almost $1 million notional. They ended up profiting $30,000, and the most money they ever had at risk was the cost of the evaluation. So they're taking a high risk, low time frame scalp with almost $1 million, and the most they stood to lose is the cost of the $200,000 evaluation. That's only possible at Breakout. So if you guys want to take trades like this, you want to potentially be featured in one of these videos, make sure you're trading with us over here at Breakout. Go to breakoutprop.com, sign up, and maybe you will be featured in the next Payout of the Week video. That's all I got, guys. Talk to you in the next one. Peace.